Everyone doing all right? Good. Dennis Geekus, how are you? Hello, Sabash, Greg, everyone. Okay, so called the turnaround Tuesday top in the dollar. People know I like to be flat into NFP, said sell dollar strength, faded after the NFP. 50% retrace right here in between 50 and 61.8. And here we are pressing the lows. So if we hold these lows and we get another bounce, it's starting to look like a descending triangle here. Say we get a bounce back to 94. Lower probability that we're going to challenge the NFP recovery high there. And then if you just take a measured move from here, it's about 123 would take you to about 92.50. And last week we talked about that this was a breather in the dollar. You never know if it's going to turn into a major turn, but one step, one day, 1 week at a time. So here we are on the weekly, and 92.80 is going to test this breakout. So that's the target, about 80 points away from it, and it sets up pretty nicely as a descending triangle right here. You could even call it a head and shoulders, right? And maybe the neckline's just a little bit lower right around here. I don't know if I would chase it here on Monday for a breakdown. I'd wait for some type of recovery, at least back towards 94-ish, if that happens. So not a big believer in chasing anything. The strength is Aussie. That surprised me. Still making new highs. Looks like a nice little head and shoulders breakout here in euro, right? Just call this resistance here, as long as we hold this level. 1520 to 1720 gives you eventually a target of 1920, which is still actually coming, will end up being close to this return line here. So I think Greg is looking for a little higher. I'm thinking 119.30, 1920 for this move in the euro. Everyone with me? And then there's another little descending triangle, and this will probably happen if the dollar bottoms around 92.5, 92.70, and it's in the silver. So to me, on the 1 hour, again, pretty classic descending triangle. It'll negate the triangle if we close above 1660, the upper line. But the measured move here on a breakdown might even be worth a short as the dollar gets towards that level. Around here, 1650-ish. Maybe you're wrong over 70. And then if we take out the 1630, it measures down under 16. Okay, that'd be enough to take out the stops here that have been buying silver, hoping we were going to break out. And, you know, it's good or bad from this week is the way it looks to me. Gold putting in a little higher low, maybe it's going to make a run towards 13.15. You know, these markets have to take advantage of a weak dollar now. So if they're going to go, they're going to go. But it's still my contention that this dollar, this is not the final high in the dollar. And just one thing that gives me a tip on that being true, and it doesn't always work, but I was surprised the dollar came down, even though that was a level that was called, because you look at the 1 hour chart, and up here at the high, the market actually confirmed it. So for now, looking to sell rallies. If you didn't do it Friday, eventual target back down towards this weekly target, daily target. I have some confluence here between 92.70 and 92.5. Breaking all the way back down to 92 might be a little bit too convenient, but that's what I see for right now. Oh, also one last thing is that the bonds look like they can, yields could fall again. They had a nice recovery last week, which, you know, has implications for the yen, right? Where's that 10-year? Monday morning. See, rallied right back into a gap. The bonds did the same thing. So we had the yen pop last week, and if this is going to be a failure, I think Rega has a pip out that he's in already, looking for shorts in the yen. I concur. I guess it's just a matter of a little bit of timing. Looks like it's already kind of drifting away. Have a little reversal day here. But, you know, these flat tops, I would actually like to see one more push up to above 110, 1010 to try it up there. But if the S&Ps fail from here, they finally cleaned out stops. They got over 40, right? Took out all these highs, rolling over. But then Grega has PIP looking for almost 2,800, I believe, or 2,830. So it's hard for me to get bearish S&Ps when Grega's wave work is saying something else. That's really the big advantage of ForexAnalytix is, you know, you have one of the best guys or ladies in waves and harmonics, Andre, and I don't have to tell you, you know, most of you people have been with Blake for 10 years. Volgy's so disciplined. He's so anal. It's unbelievable. But I just, before I turn it over to Blake, just want to tell you a little bit about my weekend. I was walking through Forest Park FX one day, and I was looking to trade a better way. So I ran into Trent, and he told me how I can not be bent by the broker that I'm with. And with that, I turned around and I waved bye-bye to my broker because Trent found a better one. Oh, the ruble. Hi, Blake.
That was great.
How was your trip? You look like you had a great time. You get sunburned?
Yeah, I'm fried. My nose is purple. So I mean,
Yeah.
it's you know, it was a nice trip. We went with another family. We caravanned all the way there, caravanned all the way back. You know, our kids. I think we went to the beach. Well, we went to the beach every day. That's all they wanted to do is, you know, go to the beach, and that was it. You know,
good weather.
Yeah,
This
I mean,
weekend especially.
We even contemplated, you know, hey, let's you know, one morning it was a little, as you know, living in Southern California, it was a little overcast, but it burned off, you know. But that morning we were like, oh, let's go to the you know, aircraft carrier museum, just do something different. And by the time we you know, had breakfast, the sun was out again, and you know, the kids said, no, we want to go to the beach. So I mean, we really literally went to the beach every single day, twice a day. You know, we were within walking distance. So it was, yeah, it was really nice. It was it was great. The kids, you know, for us as adults, you just want to make sure your kids have these lasting memories that, and them playing on the beach with their friends and making new friends, and you know, on cool. Just it was cool. You know, that's and so it was wonderful.
You're good.
Thanks. Well, it was I think they really enjoyed it. So for us, it was just you know, getting just making sure that we could coordinate it all just to get them down there and back, and you know, spend as much time on the beach as possible, and it was awesome. Now I'm struggling trying to get back into the swing of things, because you know, getting up at 3 this morning was extremely difficult after sleeping in. I really have done No work whatsoever as far as the markets go. I saw the euro on its reversal when the euro, you know, I remember when it was trading around the 115 and change. I saw it one morning. Well, I think it was maybe Tuesday, maybe Wednesday,
Yeah, it was
and I'm like,
Tuesday.
yeah, it was whatever day it was, and I'm like, man, this thing's probably going to bounce, but I'm like, I'm not going to do anything about it. You know, I was thinking I was actually really considering buying some euros down there, but I didn't do it. I said I don't want to mess up my trip. Last thing I want to do is, be
Oh,
focused.
good. So you actually, when you take a trip, take a vacation from the market.
I do.
That's smart.
Unless I've got something really big brewing, like a position that I've been waiting for.
Then it's not a vacation. It's a
No, it's
working
not.
vacation. It's not the same.
Yeah, it is not the same, and so I really didn't read any market emails. I didn't do. I really
Detached.
Well, I'm sorry.
Detached.
I did. I completely detached. So coming back today, one of the things that obviously in retrospect you go and you see what had happened. But one of the things that I noticed is that we actually did some pretty key reversals last week, as far as the dollar goes, and from what I understand, everybody's saying that the situation in Italy, it's all priced in now, and so whether it is or isn't, to me, I'm just looking at the shakeout that happened in the euro, and if you look at this 4-hour chart, for example, and this illustrates it pretty well, is that we broke these lows right here from, you can see the spike low back in November. We broke it in reverse. So that to me is a shakeout regardless. Whether you believe it or not, whether you believe that whatever's happened in Italy is not going to pass so easily, it doesn't matter from a price action standpoint that the euro will probably see 119, 120 before heading lower again. That would be my assumption. And you can see we have this inverted head and shoulder pattern, which we're approaching the 50% retracement. I would assume this is probably the neckline. We might be crossing the neckline now. Some of you might be saying, well, Blake, it maybe looks like this. Regardless, I don't think I'd be too comfortable with euro longs unless the euro breaks above this 117.60, which it looks like it's going to do. I'm not here to say it's not going to do. What I'm showing you right now is it probably needs to get above 117.60 in order for it to really, start to play out. But I think if you're looking at the euro, like I am, and I'm again taking a step back, looking at the price action, I don't think I'd want to be on the short side of the euro right now. I'd probably rather be a buyer of dips, and I think that's exactly how I'm going to try to play it today. Is if the euro dips, back down below 117, I'm going to be a buyer if I can get it, because I think the risk is pretty manageable from here. And like I said, the tell for me is that we had this false breakdown last week, and so there's a lot of people that got shook out. We've been discussing this for months now about the big positioning in the euro on the long side at the beginning of the year. They all got shook out, and this break below the 115.50 level really, did it for me. So now I really want to be buying the euro dollar on dips. Now, there's one other thing that happened that was pretty important to me, and Dale, you and I had been discussing this for weeks, and take a look at the bond market. So we had the bond market. They came out of the descending wedge. We broke this was an aggressive squeeze. When I saw this, I was like, holy cow, I can't believe I missed this move. Not so much this move, but the move in the dollar following what had happened here. Real big squeeze out in the 10-year. but we've come back and we retested that broken trend line, and now, as long as we stay above this broken trend line, this is another thing that really has me believing that yields are going lower, and the bond market's probably going to continue to rally. Do you know what caused that spike, Dale? I don't even know if you're sitting in front of the.
I'm here. You mean the rally spike?
Yeah,
or
this
the pullback?
spike.
That was Italy.
That was the Italian scare, right?
Yeah, their bonds crashed, and a flight to quality into ours.
Okay, so that was the move. Well, the technically, this move, in my opinion, has really cemented the idea that we're going to have yields coming down still, which is going to have a negative impact on the dollar, I would think. So, as long as the bond market holds these levels, and I should actually, what I should do right now is just draw some fibs here from the lows. So here's
for sure the yen, you would think, would sell off if we get to your targets up there at 22, and perfect pullback to the breakout here. Great chart play.
Yeah, and that's what I was thinking this morning, and so I sold some dollar yen at 109.50 this morning. So and the dollar, and I told the guys and gals in the chat room I sold some dollar yen at 109.51, and I'm looking at this as being we're gonna hold the 618 probably in this trend line, and we'll eventually make it up to that breakdown point in the bond market around that 122 level. And if that happens, the dollar yen will probably see 108.50 again, or 108, or maybe even lower than that. So as long as the bond market stays where it's at or higher, then I don't mind being short the dollar, and that's in the dollar yen, and probably would equate to being long the euro dollar as well. Even though I'm not long the euro, I'm just pointing that out. But we have this euro, this sell-off in the euro, which has been pretty massive, and a nice reversal. The pound, the pound still is has not completed its double top, but man, we've had a pretty wicked pullback in the cable, and the cable looks strong. Everybody's got their attention on the Aussie today. And I notice a lot of people talking about the Aussie. There's the banks, the research that I've read this morning. Everybody's looking at the Aussie dollar and the reversal in the Aussie, and look at how strong the Aussie is. The Aussie's up almost 100 pips, and from what I understand, it's the retail sales last night. So the retail sales came in strong, but is it strong enough to really constitute a move? This strong move in the Aussie? The one thing I will point out about the Aussie dollar is its reluctance to move lower as the euro was moving lower, or its reluctance to move lower as the dollar was strengthening. So now that the Aussie is where it's at, this is we're 20 pips away from really starting to squeeze. And some of you might be looking at the Aussie saying, what do you mean starting to squeeze? Is this squeeze not enough? How can it squeeze more? But take a look at this. This is a massive. This is a multi-year trend line. I think it's a year and a half. So beginning of 2016, we have this broken trend line that we've been below. We're coming up to the underside of this trend line. We have another downtrend line coming right over here. So I would say if we get above 77 cents. This Aussie is going to just, it's going to, we're talking probably a pretty big, push higher in the Aussie dollar. Well, I didn't mean to do that. If we really start getting above 77 cents, and it's possible looking at the euro dollar and seeing what, the euro is capable of, you get the pound squeezing back to 135, 136. This Aussie is going to look, bonkers strong, as long as we don't have a massive reversal in risk appetite, which could still happen. So Dale, as far as equities go and what we've seen in equities, what happened last week? Was it any big moves in equities last week? He stepped away. He must have stepped away from his mic. But look at the S&P. I mean, the S&P looks relatively strong, even though we're heading into beginning of June, which typically, this is the time of year when things start to
we had some big down days, but there was no follow through. You could tell. I mean, they were big range days, 300 Dow points, 400, and then close bad, and then come in and get it almost all of it back, then close down and then get it back. And Greg is bullish, looking for I think 2830 on the pip. So
so he has I've
put out a new one. He's long for this. I think Steve saying the correction ended too. So, looks like we're almost at a third drive in NASDAQ. So it looks okay.
Yeah, I mean, the stock market looks all right. I mean, it does. We're back at the 618, which has been a big challenge over the last couple of weeks. It looks
so
like
the bond rally actually was the reaction to Italy that only had like a one-day impact on stocks and much more of an impact on bonds and yen. So risk ignored Italy pretty much in
well, yeah. I think that's been the tone of the stock market. The U.S. equity markets, at least for the last several years. It's like, okay, is that going to impact U.S. equities? Or is it more is it a case of just affecting European equities and not so much U.S. equities? And so we take it all with a grain of salt, right?
Yeah, I mean, in a bull market, they like the bonds going either way. If yields are going up, it's because the economy's strong, and if yields are falling, that's supportive of valuations.
Right. Yeah, there you go. You can make that argument, right, for anything.
Yeah.
Another thing that I noticed too, again, this is all, taking a step back, coming back in this morning with a fresh set of eyes. I had to redraw a lot of my charts, everything from my drawings from 2 weeks ago. But not so much the Swissy. Do you notice where the Swissy's at? The Swissy is showing some strength, the Swiss franc. We are challenging this broken trend line here. I had been looking at this as being a long candidate if we drop back to this red trend line, this one right here. Now, we're obviously below it now, but I drew it from a couple weeks ago. I had it drawn like this. Let me grab my pen. I had it drawn like this, that we'd look for a bounce like this. But now that we're here and seeing what I've seen with the euro dollar, I don't know how comfortable I would be about being long the dollar Swiss at this point. And because let's say that the S&P fails here at the 618, if it does the Swiss franc start to gain some strength from a risk off standpoint? You know what? And I was actually reading one other thing that I thought was really interesting, and it's something that I mentioned before we left, and before I left, and kind of before the Italian thing, with all of this talk about trade war, tensions, tariffs. The market might start to look at the dollar or the euro as more of a safe haven currency, believe it or not, than anything. And I was reading, I can't remember if it was Citigroup or Morgan Stanley, one of the bank research notes I was reading says, as perverse as that sounds, the euro might end up being bought as more of a risk aversion currency, and taking some of that shine away from the dollar, especially with all the trade tensions that are happening, which I found really interesting. So
yeah, so that would be, yeah, so flight away from dollar-denominated assets. That probably happens after this ABC is done in the bonds, is what I'm thinking could happen. Maybe a bad bond market and our currency doesn't get strong because people don't, start shying away from U.S. assets because they don't know what's next. Why should they support us and buy our debt if we're tacking tariffs on them?
Right. I mean, that could be the case. So, one of the things that I'm going to be doing all day today, and one of my objectives is really just piecing all the information, tidbits that I've received over the last week, putting it all together and kind of formulating some sort of plan around the market. But but basically my takeaway at this moment in time is that bonds still look like they could go bid here. It looks like yields are going to stay a little weaker, which is going to keep me, basically just continuing to look for dollar shorts. And I think that's going to be, my play, just trying to figure out where strategically good places are to be short the dollar. Like I said, being long the euro to me right at this very second in time it's not super attractive, but being long the euro dollar, below 117 might be a better offering. And it's hard for me to buy the Aussie dollar when it's up 100 pips, but I can't ignore the fact that it is up 100 pips either. So if you look at precious metals, and I know you were showing silver a little earlier, if those precious metals get a little bit of a bid, I think that the Aussie could perform a little bit better as well, alongside with the yen. And the fact of the matter is that the dollar does look kind of weak at this point. Not and we might get a little back and forth, but overall, I think I'm gonna be targeting the dollar on the short side, especially that you look at this week as far as data goes. It's not a huge data week for the U.S. So I think a lot of it's going to be what's happening in the cross markets versus anything else. So, but maybe to shed a little bit more light on everything, Steve might have some better things to look at, and maybe some ideas for all of us. So, Steve, are you there?
Nope, I'm not, and I have no ideas. So let's close it.
How you doing, Steve?
I'm good, mate. How have you been? I hope you relaxed and charged up the batteries.
Oh my gosh, I did. I tell you, I slept in every day. I got up after the sun was already up, which is rare for me. Usually I get up before the sun is up, so it was nice. I did recharge. I'm burnt. My nose is so burnt that I feel like it's going to fall off. It's like nearly purple. But other than that, we had a wonderful time, and the kids really enjoyed the beach, and I think they had a great start to the summer. So, and we were with great friends, which made it that much better, as a group. So
my turn to go to the beach for a week, right?
yeah, please do. It's definitely rewarding in the summer for sure. It's something that when you trade the markets all year long, it's important to get away, for a week here and there, just to get your mind off of things. But since I was off and I wasn't around, what have you seen in the markets over the last week that has really piqued your interest or interest of the traders out there?
I was actually mentioning that dollar should weaken further. I actually went ahead and bought the Euro USD prior to the NFPs, and we had a conversation in the chat room. I explained that I don't mind owning it there because I think that it's due for a bounce. After the NFPs, as you've noticed, there was almost no bullish reaction to the dollar, despite the very good data that we got, and I think that was an extra confirmation.
It was really a good number, wasn't it?
Yeah, everything was good. I mean, every single thing, like the number itself, unemployment, hourly earnings, average hourly earnings, everything beat expectations. We even had a positive revision of the previous data, and yet the dollar did not, only momentarily, like bounced a little bit, and then it gave most of it back by the end of the day. For me, that was more or less confirmation that the path of least resistance in the short term is lower for the dollar. I do think that 90 to 50, perhaps even lower, is going to print, and before we get another bullish leg for the dollar. I do think that this move that will be unfolding will probably end up giving us some nice opportunities to be long the dollar against the euro, against the cable, at more appealing levels. Like I'm actually, my long target for the euro USD is 118.50, but it might extend even higher to that. Grega thinks 120. For the cable, I always liked 136, so I'm really hoping we're going to see that. So I do think that we might have more days ahead of us of dollar weakness. What I didn't expect is the strong moves that we saw today from very early hours, in the Aussie and the Kiwi. Both of them are actually currently are about to violate some important levels. I know that you showed the Aussie. I have the exact same things on my chart as well, and this is something I'm closely monitoring. I did buy early on Friday the S&P as well, because I do think that the correction might probably be over. So I'm long some S&Ps. Now, having to do with the yen, I'm not very sure. We have indicated with Grega that 110 is a very important level. I see that you've been selling it as well. I haven't sold it, but I do see a very nice potential, to find some kind of a short-term top here. So I'm also with you on that, although I consider it a little bit more risky. So I chose to have dollar exposure somewhere else. But yeah, that's it more or less, and we have more charts to show now. Having to do with metals, there's a friend here asking why gold is so weak. What do you think, Blake? What do you think that metals are going to do? They don't seem for the time being to be responding to this dollar weakness, but what do you think?
Gold's difficult. We had a big, this is a big breakdown from remember, we spent the whole first half of the year basically above 1,300. So when we broke down, was it 3 weeks ago, when we broke down and broke through the 200-day moving average, I think that was a pretty big deal. I think we're going to need some convincing. The market's going to need some convincing to get us back above the 200-day moving average. So, as long as we're below 113.10, I'd be very skeptical about being long gold. I don't know if I'd want to be short, but I think if I was long, I wouldn't be comfortable until it got back above 113.10, because this was such a big breakdown point. But there's been very limited follow through to the downside, and I think a lot of that is going to have to be, in order for gold to get up and really start rallying here, we're going to have to see probably the bond market rally a little bit more too. I think the bond market needs to firm up, yields need to drop, and that might, take gold up even further, I think. But, gold's one of those things that I sure don't think I'd want to be short, but I wouldn't be really comfortable about being long just yet either.
Yeah, and speaking about limited follow through, there is no better example than silver. I'm desperate with silver. I don't even know what to write in analysis about it. I haven't seen in a very long time something that has been coiling, in such a symmetrical horizontal, because I'm actually viewing a little bit longer term. Yeah, exactly. But if you draw that line even further back and ignore, of course, the extreme week that we got, from that crash, daily crash down day that we had, like for a couple of minutes, the flash crash. You'll see that it's like a long symmetrical triangle, and silver has almost completely stopped reacting to anything in the market. I haven't seen that in a very long time. It's extremely weird. I do think, I was actually considering during the weekend that it wouldn't be a bad idea after such a prolonged consolidation for somebody to be playing a breakout through options, perhaps. You know what I mean? It's not a bad idea. Because when this thing finally breaks out of this formation, I think that it might explode one way or the other. Personally, I believe to the upside.
Yeah, I would probably agree. I would like to see it clear, probably like the gold. I'd like to see it clear the 200-day moving average, both on the daily for both gold and silver, and I think that would be a big testament for longs if indeed that was to happen. But you're right. I think they do look poised. Anyway, I'm gonna pass it over to you, Steve. I want to thank you for covering for me all week this week, and not just you, but the rest of the team, especially you and Dale, for really taking the reins this week. And I know Stelios was around, and Greg helped with the video, the week ahead video, which I got in so late last night. I haven't even had a chance to watch that because I got in so late and I was traveling all day yesterday. So, which I will, believe it or not, going to be watching it here in the next couple hours. So,
it was a very good video, and I suggest to everybody that hasn't seen it so far, because in essence it's a preview of the week ahead, and through the Elliott Waves lens, Greg always tries to look ahead several days, so it's definitely worth viewing. You can go to the ForexAnalytix page in YouTube for whoever hasn't watched it, and you'll go to the next week's preview videos and you'll find it there. I think it is worth doing in preparation of what's to come ahead. Thank you, Blake. It was nice having you back.
It's nice to be back, and also I want to mention that Dale, that was a great rhyme about Forest Park FX. Remember, if you guys are looking for a broker, talk to Trent or Justin at Forest Park FX. They're really great guys over there, and they're just aim is to make sure that you're placed with a broker that you're happy with, that's giving you back what you're looking for. So make sure you talk to them, because they are our sponsors of this webinar. They make it happen. So, all right, guys.
Justin will be with us the 22nd of Friday. So
really?
He's to talk to us. Yeah.
That's awesome. That's going to be really, really cool. So.
And Andre and Greg have filled in too during the webinars. Everyone came together to fill the big hole, buddy.
Awesome. What a great team we have here. So thanks everyone, and and I'll see you guys. I'll see you guys in the chat room. All right.
See you there, Blake.
All right. Okay. Thanks.
How you doing, Steve?
I'm good, Dale. I'm good. I had a lot of work during the weekend, so I can't say that I actually, recharged. But I'm going to be away for one day, due to having other kind of obligations. So at least I'm going to be one day away from work this week. How was your weekend?
Fine, buddy. Weather's beautiful, like 80 degrees, nice breeze, nice.
Nice. Yeah, the weather is summer.
What was who was in the ocean this weekend? Was that Stell or you?
That was yes.
Your yacht arrived while he was in the water. There's a picture.
Yeah, that was me with my kids.
What was the water temp there, Stell?
Nice? It's too warm. Let's
too warm. Okay.
Already. No, it's good.
I love water like that.
It's exactly, but it was good. It was good.
How long does it take you to get there from where you live?
About 5 minutes, 10 minutes.
Oh my God.
I live about 500 meters from the beach, although we don't swim there. You have to go a little bit further out, but it's not bad.
Yeah, nice. Okay. All right, Steve. So, what do you do right now?
Let's have a look. I'm currently a little bit busy. I'm on a webinar.
Okay.
But we can plan something for later if you like.
Okay. All right, buddy. All right.
Okay.
Well, you're right.
I have a friend asking about the DSI, and I think this is a good point to start, so we can go through a few charts because it's interesting. First of all, let me show you here.
No guests today, Steve, so you don't have to ask me. No guess. All right.
Yeah, I read it.
Actually. All right, buddy.
So we have gold DSI at 10 and silver's at 12. So this is something I want to point out, because we are seeing here very bearish DSI readings, despite silver being absolutely range bound, and gold. As Blake said, gold has broken below the 1300 area and the 200 EMA, but there's really not been any follow through. And even if you zoom out, right, you can see that gold has been in a slow recovery since it found the low at the end of 2016. So in essence, we see that sentiment is very bearish while price action isn't. And, this makes me believe that, the chances of a break, actually a breakout higher is more than decent, right? And another DSI reading that I wanted to point out, it's not extreme, but it's, a lot, quite bearish. There's no question about it. Is for the Canadian dollar, which is at 13. I remind you, the scale goes from 0 to 100, right? So, these are the things I wanted to point out. Platinum also has a DSI at 16. If you remember, I've been monitoring platinum as the metal that is currently showing the more potential for a break higher. And as you see, it's once again testing today this descending trend line. So I think that platinum might be the first breaking out from its equivalent formation. So those are the things I wanted to point out. The dollar's DSI has already slipped to 80. I remind you that a few days ago it was at 94, which that exact day we said that keep in mind, because we have a record low in the euro's DSI reading, and not a record high, but an extremely high reading in dollars reading. And actually, that was the 24 hours period that we saw the high in the dollar and the low in the euro, not coincidentally. Okay. So having to do with crude, we have a question, because that started from a question: what is the DSI in crude? Actually, it's quite neutral. It's currently at 40, but just a day ago it was at 48. A day before that it was at 56. So for sure the crude's reading is not extreme in any case. Now, speaking about the crude, let's have a look at it. Crude is already breaking below the 66 area. The rebound was extremely short-lived. If you see from the drawing we had made, I was expecting that the rebound might even take us all the way up to 69.40, but it didn't even get there. I think that the next stop is the confluence, which is about at 63.70, 63.80. It's the confluence of the 61.8 of the last move higher. And as you see, the same level is also horizontal support resistance. It acted several times in the recent past as support and resistance. So I do think that crude is on its way there. Now, very briefly, because Blake showed it, for whoever wasn't here, important breakout from the 76.40 area in the Aussie, also retesting this long-term trend line. But keep in mind, the day hasn't finished yet. So I'm showing this, we might get some kind of a reversal and close below 76.40 by the end of the day. As long as we stay below 76.40, you can still interpret this as a bear flag. But if we actually manage to close above 76.40, and especially above this trend line, things will start looking completely differently. I mean, it's going to definitely complicate the situation. Same thing with the Kiwi. We saw some indications that Kiwi might be rebounding. Last week, I was actually, in the beginning of the week, I was showing that in the 4-hour chart, you could also see an inverted head and shoulders formation. Regardless, I wasn't willing to buy it. And, I don't regret it, because I wasn't feeling very comfortable about it. We're seeing now a stronger recovery. In any case, I would remain quite cautious as long as we stay below 71.80, right? Because for me, 71.80, it's the ranges, bottom, the ranges support that might act now as resistance, might turn resistance in the future if we actually get there. Now, for those of you that were here, you know that I was looking to establish a long position in the S&P. I did that on Friday. I wrote it in the chat room. I got triggered long S&P, so I have an exposure. I'm now like 21 handles in the money, right? More or less 21 and a half handles in the money. I feel comfortable. I think that as long as we stay above this low that we had, at least a retest of the 2800 area is quite likely. I'm also long pre-NFPs, Euro USD. I'm monitoring this. I was monitoring this descending channel. We finally broke above it. I feel quite confident holding this position. I do believe that anywhere between 118.50 and 119.30 would be a nice area for a reversal. We have the 200 DMA being at 120. So anyhow, I'm looking for a for a stronger bounce here. Same deal with the cable. You can see here actually I haven't changed this. I mean we even go to the slopes, right? I haven't changed this since, what was it, the 18th of the month. We were pointing lower and perhaps to a recovery. So far, it has been playing along perfectly. I think that a rebound towards the 136 area is going to be an ideal shorting opportunity. I'm definitely going to be taking that if we do get there. So cable finally showing some signs of life as well. Finally showing some strength. Blake already showed the USD yen, and as I vocally expressed before, I do like it below the 110 area. I don't have such a strong confidence to that, so I'm not going to be trading it, but I'm monitoring it regardless. Now, having to do with the euro yen and the pound yen, that I know a lot of people here trade it and they keep following it. For me, since we had the first big reversal day last week, I said that now a rebound towards the 129 area is quite likely, and indeed we are almost there. I mean, today's high was at 128.75. So I'm quite interested to see how and if this area is going to act as resistance. And the same deal goes. I mean, the same thing applies to the pound yen. Pound yen, we're seeing a nice recovery. The equivalent level here for me is 147.50. We still have some distance from that. I remain cautiously bearish. I don't have a position anymore. I booked my euro yen and my euro Aussie shorts last week for a hefty profit. Now, did I do the right thing? Obviously not having to do with the euro Aussie. I expected a stronger rebound, but it didn't come. So, it's already penetrated in the lows, which means that my final target, which I'm not going to be having a position anymore there, but my final target at 152 looks very likely that it's going to be hit. So I think that euro Aussie is on its way to 152. And equivalently, euro kiwi is finally looking like it's going to break the 3-day consolidation that it produced after penetrating this ascending channel, in which case I think we should be looking quite lower, perhaps even towards the 161 area, because as I was saying last week, there is at least one leg missing here. We had one leg lower, slow correction, higher, and now one more leg missing to the downside, I think, before we can complete a corrective pattern. Okay, so far playing by the book. Let's have a look at the crosses of the pound Aussie on its way to the next area of support, the 78.6 at 174. Ultimately, I would want to see the 171 area being tested here, and pound kiwi. Here it is, coming back to retest this important horizontal area of support at 189.50. As you see, I had drawn that I'm expecting actually a stronger depreciation, perhaps towards the 186 area. So if we do break below this 189.50 level, I do think that we're going to be making it down to 186. Okay, let me have a look at a few of your questions. Oh, there's a question, it's the most recent one, but since it's about pound CAD and we were just looking at pound crosses, why not? Let's have a look at it. Okay, pound CAD. Pound CAD, there are two possibilities, two interpretations here. First of all, it has broken below this ascending channel. And we see on the other hand some clear momentum, downside momentum loss. So there are two chances here. One, this is some type of a rounded bottom. Two, this is some type of a consolidation before breaking lower. I think that as long as we remain below this level, which comes roughly at 176, I think we can be looking for at least one more leg to the downside. As you see here, the RSI profile is also showing very clear corrective characteristics. Okay, you see many times the RSI is a very good indicator to also give you a good idea of what price is doing. I mean, if it's in an impulse and a correction, I see that this rebound in the RSI is quite weak. So I would be advocating for at least one more leg lower here as well. Nobody asked, but since we had a look at the pound CAD, why not having a look at the euro CAD as well, which, as you see, is showing more or less the same thing. Last time we saw it, it was producing a triangle here, and I had drew that, triangles usually break to the direction of the previous move. In that case, it was lower, so I was expecting a move lower to retest at least this ascending trend line. That happened. Not only did happen, but we actually penetrated through it and found support. No surprise there. If I zoom out, you can see how important this 150 horizontal area was. So we found support there. We seem to be rebounding, but in all honesty, once again, just look at the RSI profile here. Just look at the price action here. I would say that this does not look like a strong rebound. I can't, of course, I can't rule out the possibility, that it's going to bounce further from here. But as long as we stay below this ascending trend line, I would be looking for at least one more leg lower, in which case I think somewhere near the 147.50 to 148 levels would be a good target to aim for. Okay, so that's with that. Let's have a look at yen INR forecast. Oh my God. Oh, obviously I haven't had a look at it. Let's have a fast look at it. Okay, I'm going to leave it for last actually. Let's go for the more popular ones. USD INR, yen INR, I'm going to have a look at them at the end, I promise. Okay. Gold and silver, we already had a look at them. Aussie and Kiwi getting a boost from China easing overnight Friday. Yeah, usually that's a good factor that keeps them elevated. Obviously, they're very. I mean, their economies are very interconnected with the Chinese one. There's no question about it. What's your view on the Aussie CAD? Let's have a look at the Aussie CAD. There it is. Aussie CAD. There it is. Okay, as you see, it's playing ball very nicely. I mean, we were looking lower than higher. Actually, it faked out people. You can see it here because it penetrated through this this ascending trend line. It's now rebounding once again. I do think that since we're going back in the middle of this range, I would be quite cautious. But for the time being, the upside momentum seems to remain quite strong. In the short term, because you're asking what I think is going to happen this week. So in the short term, I would say that as long as we remain above 98.3 cents, you can still keep looking higher. Let's also fib this from this high to this low. There we go. As you see, we're testing the 50% fib. I think that any move towards 92.20, 92.30 is going to find buyers. Next target is almost at parity. The 61.8, as you see, it's very close to parity. So I think in the short term, it looks quite decent. Now, if you're asking me about the long term, if I zoom out, you can see that this is not a pair that actually makes prolonged moves in one direction or the other. You can see for how long we have been consolidating, but within this consolidation, we have been seeing violent swings both ways. Just look at this as an example, right? This is the daily chart. RSI was overbought just at the end of March, and beginning of May, RSI was oversold, and we're talking about the daily one. And now RSI is once again approaching the overbought levels. So as you see, it is range bound, but the swings it creates within it are quite violent. Anyhow, currently as we speak, already surpassed its daily ATR by quite a lot. I don't have to measure it. I can see it, using my eyes. It's testing the 50% fib. So definitely buying it exactly here makes no sense. But buying it, if it gives you an ability a little bit lower, as I said, and looking for 99.80, yeah, why not? If you're really looking to trade it in the short term, as you're saying. Let me see, why gold is so weak. Yeah, we talked about gold. Russell 2000, time to start sorting again. Let's have a look at it. Listen, first of all, the Russell is at all-time highs. Okay, whenever something is at all-time highs, it's a very, very dangerous approach to be looking to short it. I'm the person that has tried doing it multiple times when I have like multiple confluences of resistances, etc. By the way, speaking of resistances, let's see where the 127.2 is here, quite high as you see. We also have this ascending channel. Let me show you. So I would be looking, I will extend it later for this ascending channel, perhaps to provide the resistance. We have already broken above this triangle. So this in the Russell, this has already proved to be a consolidation and we've broken to new highs. I think that you should be very cautious. It looks decently bullish. We are at all-time highs. I think the next target is at 165.56. And seeing that the S&P has more upside, I mean, I put my money where my mouth is because I'm already long that. And seeing that NASDAQ, that was our plan in the NASDAQ, also is showing, quite a good intention of breaking the new highs, I would be quite cautious trying to short IWM already. I think it's not the time yet. Okay, most likely than not. Could you take a look at the WTI? Yeah, we did that. DSI reading, we talked about it. USD TRY, let's go. USD TRY, finally, a decently strong move lower due to, the change in approach that the Central Bank of Turkey has actually made. Still, Turkey has real problems. As long as the dollar is correcting lower, I think we can see somewhat of a lower level in the USD TRY. So I would really not be surprised if I saw one more push lower, but eventually expect it to push to new highs once again, I have to tell you. Okay, so for the time being, in the short term, if I had to do something with it, I would probably be short. But I have no real indication that this is anything more than a pullback. Okay. And let's have a look at the USD INR. There it is. You see, last time we looked at it, I was expecting higher, then lower, then higher again. So more or less that's what happened. We got higher, lower, higher again. Higher again is pending, obviously, in this case. Bottom line, what I think is that, that was a critical area of resistance. We held it. And, as long as this 69 area is holding, you have to be cautious. On the other hand, I'm not seeing very impulsive characteristics, but we might have more downside, where I would be looking for more downside to begin with here. Okay, so in the short term, if we see a rebound there and a failure, I would be looking lower. Okay, but still, I would be extremely cautious because, this looks to me like a very legit breakout. And I do think that this move lower, whenever it stops unfolding, is going to prove to be corrective, right? So I would eventually be expecting higher. Just letting you know. But for the time being, I think the next short-term move is probably lower again. Okay, so that's what I think about the USD INR. And if you want us to have a look at the INR yen, sure, we can have a look at it. I've never had. Okay, that's quite easy, actually. First of all, we had very significant RSI divergence. You can see that. What we call a reliable divergence, because the first print was below 30 and the second one was above it, right? But on the other hand, this can just be a flat correction, as Gregor would say. And so we can see something like that. And in any case, I would be quite cautious here because this, in the longer term view, looks to me like some consolidation. I said perhaps it's a flat before moving lower. So I do think that this might have higher to go in the short term, but eventually lower. Okay. So if there are not any more questions, I'll see you all in the chat room, and we'll be here to tomorrow again. Dale, are you here, mate, to wrap it up?
Yeah, thanks, Steve. Good analysis. I'll see everyone for Turnaround Tuesday. Don't forget to subscribe to the best team on the net. And see everyone tomorrow. Maybe I'll have some Turnaround Tuesday candidates. All right. Okay, guys, enjoy your day. We're going to the moon in June. See everyone tomorrow. Don't just count your pips, count your blessings. Adios. Thank you, Steve. Thank you, Stel. Thank you, Blake. The team is whole.